Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange bringing you a review of this week's stock market. On Monday, new home sales for March came in at 511,000 annualized units compared to the prior month's 519,000. Markets didn't move much as investors were on edge due to upcoming earnings reports and the Federal Reserve's meeting. On Tuesday, durable goods orders for March rose 0.8% month over month compared to the prior month's 2.8% decline. The Case-Shiller home price index for February rose 0.7%, and consumer confidence for April dipped 1.9 points to 94.2. During after-hours trading, Apple fell over 6% as it posted its first quarterly decline in revenue in over a decade amid slowing demand for its iPhone. On Wednesday, U.S. crude oil rose almost 3% to $45.33 a barrel, its highest level since last November. The Federal Reserve concluded its meeting and kept rates unchanged, and also noted that the economy appears to have slowed and that growth in household spending has moderated. Markets were mixed on the news. On Thursday, markets opened to reports that the Bank of Japan didn't increase stimulus to its economy, and also the U.S. GDP for the first quarter was a disappointing 0.5% as consumer spending slowed. Jobless claims for the week ending April 23rd rose 9,000 to 257,000. Apple continued to lose over 3%, weighing on the markets. The Dow Industrials closed down 210 points and NASDAQ down 57. On Friday, personal income for March rose 0.4%. However, consumer spending ticked up only 0.1%. Inflation remained tame with the PCE price index increasing 0.1%. Markets opened sharply lower on the news. Now let's take a look at some stocks. Facebook shares surged more than 10% after the popular social networking company reported first quarter earnings Wednesday. Sales increased 52% year over year to $5.3 billion. Profit tripled from a year ago, reaching $1.5 billion or 77 cents a share, far surpassing expectations of 62 cents a share. Comcast announced that it is buying DreamWorks for $3.8 billion or $41 per share, representing about a 50% premium from where the stock's price was before the merger talks were reported. Amazon shares shot up more than 12% Thursday after market as the company's sales increased 28% during the first quarter of 2016 year over year. Amazon also provided strong guidance for next quarter, estimating net sales are expected to grow between 21 to 32% year over year. Amazon Web Services accounted for 56% of the company's profit this quarter. LinkedIn shares increased after the professional social media company reported earnings, with total revenue increasing 35% year over year, reaching $861 million. Premium subscribers contributed $149 million to total revenue, an increase of 22%. Expedia was up more than 10% after hours on Thursday after its first quarter financial results surpassed expectations. The company reported earnings of 9 cents per share, beating estimates of 6 cents. Revenue jumped 42% year over year to $1.9 billion. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.